Good morning, everyone. I hope you're well on this a lovely Thursday morning. We'll just take a couple of moments to allow people to arrive as we've just turned 10 a.m. in the EU and 9 a.m. here in the UK. So we'll just bear with it a little bit until that trickle in slows down a little bit more. While we are just waiting, I think it is slowing down. If you could just make sure you are on mute, that would be great. But I think we have now slowed down, which is great. So welcome. My name is Anne Brooke. I am the Director of Knowledge and Learning at the Chartered IIA here in the UK and Ireland. I'm going to be chairing this roundtable discussion today. So welcome from me. I'm joined by a few people who I will introduce shortly. I want to thank ECIIA as well for arranging and hosting this session. So thank you to our colleagues at the ECIIA. Macro and geopolitical volatility was already high prior to this year and prior to us doing the risk in focus research, but it does seem to have increased even more this year due to, we've had intensifying conflicts and also the Trump administration, which has been impacting across the world in terms of real regional politics and the reactions to the political positions of the USA. But also, society has been reacting to those. And we've also had economic tensions increase. We all remember the flip-flopping on tariffs from the USA administration as well. And that has led to organisations questioning their strategy and their futures and, what the impacts of those will be for them, but unable to make decisions as well. That's because of the uncertainty, that has just simply increased. And that, some have decided to ride the storm and just kind of hopefully let things settle and to get to a more stable position before making strategic decisions, but others have. And who knows which is right or wrong. Kind of we're still in a bit of a higher state of flux, as it were. So welcome to this session. As we go through, if you have any questions, please pop them in the chat. There will be time. We've allocated about 15-20 minutes at the end for your questions. So as we go through, please do pop your questions into the chat, and we'll pick them up towards the end. So first of all, I'm going to introduce you to our panelists. So, rather they're going to introduce themselves. So John, would you like to introduce yourself?
Hi, I'm John Devine. I'm sort of chair of an international investment bank and on the board of one of the leading asset managers. Chaired risk and audit committees over my career as well as actually working in senior executive positions in the financial industry for almost 40 years now. So a lot of experience on the international stage.
Thank you very much. And Ho Young?
Yes, thanks so much for having me. And I'm Ho Young Luk. I'm the head of research at AMIC, which is the UK's Association for Risk Management Professionals and Insurance Professionals. And we've had the pleasure to work with the IIA, our friends in the IIA, especially in the past few years with all these things, all the great things happening in geopolitics. So it's good to be here. Thank you very much.
Thank you very much. So before we come on to the panelists, I'm going to hand over to my colleague Mamun, who's going to take you through a presentation. So Mamun, would you like to introduce yourself and then crack on with the presentation?
Thanks, Anne. I am going to just take quick control over this presentation. There we go. Yes. So thank you. My name is Mamun and welcome. Thank you for joining today's session. I'm the Senior Research Executive at the Chartered IIA. And so today I'm just going to explore macroeconomic, social and geopolitical uncertainty why it matters, and how internal audit can respond. This is based on insights from our Risk in Focus research and recent roundtable discussions. So let me start by explaining how we gathered these insights. Our Risk in Focus report is based on a robust methodology, a survey of chief audit executives across 15 countries. And this year we had a record 879 responses, plus interviews and roundtables with experts and academics. So the findings reflect a broad and diverse perspective from across Europe. So macroeconomic and geopolitical uncertainty was a key risk in the report for 2026. But it's not just another risk, as it cuts across pretty much every other risk in some way, shape, or form. Global instability is reshaping organizational risk profiles. Internal audit can't just provide traditional assurance anymore. They need to offer strategic foresight. And that's why we held a roundtable in October to explore practical steps for resilience and preparedness. And I'll share some of those insights with you now. So organizations often react broadly to external risks without understanding what they mean for their specific context. So, for example, one roundtable participant noted that some firms try to fix global issues like climate change rather than asking, what does this mean for us? Inflation and recessionary pressures you know, are real, and several CAEs shared that liquidity planning is now a board level concern. One example was a logistics company that had to rethink its entire cash flow model because of sudden traffic tariff changes. Outdated and budgeted practices come up repeatedly, and many organizations are still relying on historic norms instead of stress testing for today's volatility. So some practical tips for internal auditors can be reviewing whether financial plans include stress testing scenarios for interest rate hikes or supply chain shocks. Internal auditors should ask if they have a plan if revenue drops by 20% in the next quarter. Another useful approach is to challenge assumptions in liquidity frameworks. Are they based on old economic conditions or today's reality? So resilience isn't just a buzzword. Roundtable participants agree that cyber attacks and supply chain failures are now everyday risks. So one example shared was a European bank that had to relocate servers overnight during the Ukraine conflict to avoid cyber exposure. Public sector organizations are particularly vulnerable. They often lack resources for robust cyber defense, making them prime targets. So some practical tips would include whether internal auditors should check whether crisis management response plans are tested regularly. They should ask when the last time they ran a cyber breach simulation. And another tip is to review third-party dependencies. If key suppliers go down, what's the backup plan? Auditors can push for shared services or collaborative resilience models to reduce costs and improve coverage. Tariffs and trade restrictions can disrupt supply chains overnight. One of the logistical firms at the roundtable shared how they had to reroute shipments within 24 hours due to sudden sanctions. ESG reporting can be another headache. Requirements differ across jurisdictions and compliance costs are rising. Public sector bodies admitted that they don't simply have the funds to meet every ESG target. So internal audit can help by mapping out which ESG obligations are mandatory and which ones are aspirational. And that helps them to prioritize efforts within budget limits. Scenario planning is key. Auditors should ask what happens if a major trading partner imposes tariffs tomorrow. Encourage management to build flexibility into procurement and logistics strategies. Audit practice, evolution, and workforce capability. Audit is shifting from broad coverage to deep dives into high-risk areas. So roundtable participants said that that's essential to uncover hidden vulnerabilities. Digitalization is a game changer. Real-time dashboards and assurance maps are helping auditors stay ahead. But remote working has created a skills gap. Younger auditors often lack the interpersonal skills needed for effective engagement. So I think one of the practical tips that we took away from that roundtable was that, auditors should promote mentoring and shadowing opportunities, encourage auditors to spend time with operational teams to understand cultural nuances. Another tip is to use workshops to bridge the gap between senior management and frontline staff. And one participant shared how these sessions revealed a disconnect in risk perception that formal reports missed. Cross-sector collaboration and strategic influence. So collaboration across sectors is vital. Risks like geopolitical instability and cyber threats don't respect industry boundaries. Internal audit needs a voice at the top table, and roundtable participants stressed that auditors should be part of the strategic discussions and not just compliance checks. Auditors should position internal auditor as a trusted advisor by bringing insights from other industries. For example, share how a logistics firm handled sanctions or how a bank managed liquidity during a crisis. They should champion resilience as part of organizational culture, embed it in policies, training, and decision-making frameworks. And finally, they lead on strategic foresight, help boards think beyond the next quarter and prepare for long-term uncertainty. So yeah, that brings an end to the overall summary of some of the key findings from the roundtable. I'm going to hand back to Anne so that she can continue with the panel discussion. Thank you.
Thank you very much, Mamen. So a good overview there of some of the discussions that have been going on at our roundtables. So I'm going to start. We have 4 questions to put to our panelists. I can see one question already in the chat. So please, as we go through, if you think of the question, pop it into the chat. We have allotted some time at the end to ask those. So we'll come to those once we've done these 4 questions, if that's okay. So my first question, and I'll come to you, excuse me, I've lost where I am. I'll come to you first, John. How can internal audit move from broad external risks, such as geopolitical instability or macroeconomic uncertainty, to practical organisation-specific actions? Oh, we can't hear you if you're talking. Member, would you take the slides? Can we take the slides and shared? Because I can't see everybody on screen. Thank you very much. It may be that we've lost. So can I come to you first, Ho Young, on that?
Yes, of course. Yes. So I think the attention that we pay to geopolitical risk tends to be very much driven by the news cycle. I mean, just open the headlines to whether it's the BBC or Euronews or whichever outlet you use to see what's dominating the headlines. Most likely something from Washington or the latest thing from Washington. And I think what we really need to do, both as internal auditors as well as risk professionals, is to really embed scenario analysis in our organizations, with things like stress testing. We need to engage our C-suite and our boards more closely. We need to engender more risk and better risk ownership, and this is to achieve some of the more practical and tangible solutions to the challenges that organizations face. And so this is precisely where internal audit and risk can work together closely. And the model for this obviously is the 3 lines model, and we can come a bit more to that later, perhaps. Do we have John back online?
I can't see John back online, so we will continue with the questions that we have. So yeah, I don't know what's happened there. So Maman, could you contact John and just see what's happened for me? Thank you. So yeah, so I think you're right. I think I think what's happening with the geopolitical instability is that organisations can't really control that for themselves. I think what we actually can look at as internal audit is the impact that has on our organisation, and think about, well, where is that risk having the biggest impact, and that then drives that risk assessment that drives where we focus our time, and therefore the assurance that's needed. If you're working in a manufacturing or a retail organisation, you're going to be potentially impacted very hard in your supply chain. Whereas if you're a local authority, public sector, local government, your supply chain is much more closer to home potentially. So the risk exposure there might be different, but you are impacted by political responses from your government to political activity elsewhere in the world. So, the way these things impact our organisations can actually be different, and therefore we need to make sure our audit plan is aligned to our specific risk exposure. But I think it's very hard to audit geopolitical risk itself, but monitor it and understand where those impacts would be.
It is indeed. And I was also thinking, I know John is not here, but obviously John is in the sector, financial services, where I think geopolitical expertise in-house has been very sophisticated for quite a long time. Whereas the tendency is across the board to engage external experts, because one literally cannot be an expert on Russia in the same way you can be expert in the Middle East. But the danger, I suppose, is that even with great external advice, you need to bring it back to what relates to your organization, what are the issues that really impacts your bottom line. So I think it's the mix of in-house and external geopolitical expertise that one should really try to strike a balance.
Yeah, absolutely. And use that expertise to help drive where internal audit's focus is. Absolutely. And there's the society response to those politics, to that economics as well, and how that impacts your customer base and, the members of public that your organisation serves or delivers products and services to in any way, shape and form. And how is your organisation tailoring and responding to that? That's something where internal audit can assist and provide assurance and advice on, around those particular areas as well, drawing on that expertise that is available. Thank you. Still haven't got John. Is John back?
It threw me out, and I managed to get back in by downloading everything again and starting again.
No problem at all. I don't know if we'll move on to the second question, John, if that's okay. But I'll come to you first on it, just in the interest of time. So the second question is, what approaches can internal audit use to assess the impact of global economic volatility, such as inflation, recession risks and trade disruptions, on organisational resilience in particular? So, John, do you want to come in on that first?
Okay. Well, first, I missed the answer to the first question, but I think it's intrinsically linked, right? And My view clearly is that, one of the key roles of internal audit is to ensure that the risk framework understands the risk the organization is facing. And those risks will be different for every different institution, depending on your business, your logistics, your locations, etc. So first of all, my view is that before you start looking at all the other factors, you really need to understand your own organization. So you need to understand where your critical vulnerabilities are, your concentration risks, etc., etc. I think then you need to understand, I would say, when you start looking at these other factors, is how your business is therefore impacted by world events. And you need leading indicators to ensure that the organization understands how those trends that will impact it are moving. And so I think that is a key part of almost like your pre-resilience plan, right? So you really need to fundamentally understand how the markets around you operate and impact your business, politically, economically, reputationally, climate. And so I think having processes in place that internal audit can ensure through the risk committees, audit committees, auditing the risk frameworks and the information that's coming through to those frameworks, looking at the resilient plan and making sure the stressing of those plans take account of the relevant indicators in the market that's available. So I don't think it's audit's job to really go out and get those indicators. I think it's internal's job to actually ensure that the organization is focused on having the plan in place and having that plan stressed with the right indicators and understanding the relevant momentum of those indicators on the different parts of the business. So I would actually put it back to auditors to ensure the organization is prepared, not so much to be an expert in the field, but to really understand that their job is to ensure the organization. And that comes, I think, in two ways. Firstly, I think is the role of the chief audit executive on the management table. I think that is probably the most key. The interface with the risk framework and risk management is key. And then ensuring that the audit plan, which we'll come on to later, incorporates sort of a view, not just the macro level, but once you understand the risk framework, your resilience plan you have in place, how you then go about testing the componentry of that resilience. Hopefully that helps.
Thank you. Ho Young, any
Yeah, I absolutely
further
agree with John. So I think I'll make 2 points there. I think the forecasting of geopolitical risk and macroeconomic risk, as we know it, is over, it's gone. And we really need to move really big time to scenario planning. So really glad to hear the messages that IA is putting across. And that's where internal auditors and risk professionals can stress test that together and collaborate on that piece. So the end of forecasting as we know it, to say that X country will grow or X% into the GDP, those days are gone. We need to entertain not too many scenarios, but a few scenarios for different eventualities. The other big point I wanted to make was what risk professionals and internal auditors can do, which is to synchronize strategic risks, tactical risk, and operational risk, so that we don't create lags between what goes on internally in the organization and what goes on externally in geopolitics. Because you could be very well prepared for the latest tariffs announcement in a few months' time to take effect. But if you're too much ahead of that too, it doesn't really make sense to. So you sort of got to keep things synchronized internally and externally in terms of preparation and plans for the organization.
Yeah, so internal audit are well placed to do that because we have that breadth of vision across the organisation, from the strategic through the tactical into the operational. So it's actually somewhere that we're really well placed to comment on, advise on, provide assurance on that they are aligned, that they are working, that they are responding to each other and interacting in the right way. So thank you. So moving on then, how should internal audit incorporate geopolitical risk analysis into audit planning, particularly in relation to supply chain vulnerabilities and regulatory changes? So Ho Young, I'll come to you first on that one.
So I think the point was made by Mamoon that geopolitical risk cuts across all different other risks, like supply chain risks, credit risk, and all that. I think one other way to see it also is that geopolitics is a strategic risk, which drives a whole range of these other risks. So rather than to monitor geopolitics per se, you would want to monitor how geopolitics drives each of these different categories of risks, and therefore that's one of the ways you bring it back to your organization to make it practical and applicable and relevant to your business model. And you need to be agile too, obviously. I need to be agile in terms of the volatile announcements being made on tariffs. I keep talking about tariffs, but obviously it's all other things too happening in the world of geopolitics and geoeconomics. I know for internal auditors, we know that it used to be audit plans were set 1 year in advance, and you can't really have that rigidity these days with the kinds of changes. And we know that internal auditors are adjusting and adapting to the new realities today.
Thank you very much, John.
Yeah, I think it's all about critical vulnerabilities, right? I think, the word strategic risk is correct, because this covers under that's the category I would put everything into this. And for me, really, what internal audit can sort of really help and sort of planning is really have a better understanding of the organization in terms of where those concentrations of risk are. So if you understand how your organization works and the major drivers of your business, you can understand the concentration. So are you critically concentrated around 1 or 2 key suppliers? Are you critically concentrated around 1 or 2 revenue streams that if anything happens, they have an outweighted effect on your whole business model? So really, I think internal can actually use sort of the framework of the risk assessment to go into the audit plan. And when you're looking at businesses, understand maybe some of these more softer issues around the business. Not that control A and B is working, but have the business really appreciated the concentration of their business around these key vulnerabilities. So for me, if you can get that in the framework and together, and I keep bringing risk into this, it's very important that this works within your risk framework, and it's key. And when I've seen that work and not work is different organizations' approach to when something happens. And I think if you have that information and it's credible information, then your resilient planning, your stress testing, etc., can be much more geared around where those key vulnerabilities are. So that's what I would be looking at in total to help us as an organization really assure us we understand our key vulnerabilities.
It's about geopolitical and economic. They're external drivers of risk, aren't they, to our organisations, rather than being risks within our organisations. It's something that happens that has a domino effect. So it's the next layer of risk
and the key,
triggers. That's the key
for risk. Yeah, and I think the key risk is you can't control an external event, but you can, to some extent, have mitigated your positioning. Leading up to an event, if you have warning, there are trends in the market, themes, so you can start early, but not too early, as rightly said. But so if you have an understanding of these things, then you have your leading indicators. You are better prepared. So I think the biggest risk that you can control is that you're not ready to deal with it, right, as an organization. So you can't control what goes on in the world. You can be pre-positioned as well as you can. But when something happens, your biggest risk is you cannot deal with it. So you have to ensure that you're going back to your resilience planning and the economic side, the logistics side, the operational side, and importantly, the liquidity side. All those factors are well understood across the organization. And so in audit plans, go back to that point, is I think you have to ensure that all those are coming together when you're auditing parts of your business.
Yeah, I also like to mention of concentration risk, because I'm from a financial services background, and I remember when ILAS, ILAR, and all those were introduced, and talking about concentration risk in terms of financial investment and corporate treasury, because that was my background prior to internal audit. But applying that rationale and that approach to your whole organisation and your risk profile, where do we have concentration, whether it be financially, but also in terms of jurisdictions or in our supply chain, looking for those concentrations, because if there's a shock within there and you've got a lot in that area or whatever it might be, that's going to have a bigger impact on your organisation. So I like that mention of concentration as well, because I think that's really, because that will bring your organisation down, kind of, that comes back to the resilience, doesn't it?
Well, the question is, for instance, if you in any organization, not necessarily a financial service organization, but if you have 30% of your revenue is exports to the United States, then tariff has a much more meaningful impact on you than an organization with domestic business. So you really have to understand, therefore, what happens overnight if your product is unsellable. That's a huge shock, right? So you really have to understand all these I call the componentry that drives your business. And I think therefore, if you have that, and I think I would go back, the thing I would reference, and I'm obviously showing my age a little here, is, when I was first started auditing, when I started as an internal auditor, disaster recovery was the big thing, right? Your computer goes down, disaster recovery. Resilience is no different. It's just wider. It covers your balance sheet, it covers your clients. But so the same discipline, diligence, and approach we used to have over that, I think we need for the resilience plan of an organization. And you can test that through paper walkthroughs. What if? So your stress planning, your scenario planning, but then actually walking through that, not just having a piece of paper which sits on a shelf, is very, very key.
Yeah. And of course, Global IIA has just finished the consultation on a topical requirement on organisational resiliency, which talks about not only IT, but also finances and so on. So, kind of a lot of it's in there and what you're talking about. So if you haven't had a look at that, then please do. And obviously the final version of that will come out in the new year, which will talk a lot about organisational resilience and how to approach auditing it. Final question that we've got. So I am keeping an eye on the chat. There are a few questions in there. So if you have any others, then please do put them in there and we'll come to those shortly. But how can internal audit leverage digital tools and assurance mapping to improve risk visibility and responsiveness in this rapidly changing external environment? Quite a mouthful. John, I'll come to you first.
Okay, we say rapidly changing environment, but I think I would say is that we've lived with geopolitical macroeconomic risk for the entire history of business, right? I mean, oil companies live and breathe this, logistics companies. So it's just become more mainstream in our thinking, right? So I think the information is around us everywhere. The key, and I said, is really understanding what information you want to look at. I think assurance mapping is key because that brings all of the organization together. And there are products which you can go and buy for that. There are products you can develop yourself. So I think it's really key that the assurance map is in place, is updated, and fundamentally, how that assurance map will work under stress. Because what happens in a normal business environment is one thing, as we saw in COVID, in a stress situation, things change different rapidly. So I think you really have to get the insurance map going, but then fundamentally understand how that will work in times of stress. To do that, I think there are a lot of tools out there, information tools, and again, I'm not sure it's audit's job to be leveraging these tools. I think it's their job to ensure the organization and the risk framework is leveraging those tools that are available. So for me, the key thing is firstly understanding what leading indicators you want to look at, and then the impact of each of those, either individually or in combination, correlation with others, can significantly impact your business. And then understanding that, whether the risk visibility, not just the degree of it, but the momentum of how that risk will play out. Because what people do not understand is the momentum of risk is different in different circumstances and different actions you take. And I was reading a really good article in the FT this morning, which I refer people to, about agentic AI. And it was saying now digital hackers of the state variety are now using AI to perform the hacking. And the issue they were coming up with, a great example, was they're not just bringing systems down in terms of doing this, but they're changing the behaviors. So if you have face recognition through an AI model, they change that so it doesn't recognize the face. So this new world of AI is going to have a massive impact on some of the threats we're facing. So I think it's, again, the job is less about the digital tools out there, more of an understanding of the threats and what indicators you need to do that. I think a lot of it after that is really common sense and framework. Maybe that's not quite the digital answer you were looking for, but I do believe judgment is key.
Yeah, no, thank you. Any thoughts?
Yeah. Once again, I'm finding myself agreeing too much with John, but basically, yes, geopolitical risk, as we have known it, we've lived with it for a very long time. I mean, governments have been changing all the time, whether through elections, hopefully, or revolutions. It's just that in times like last year, where the so-called year of elections, you had more potential governments changing at the same time with their propensity for more volatility and more unpredictability. But it's fundamentally that. So the kind of skills and tools and techniques that we have developed to monitor geopolitical risks have been there for some time. What the digital tools can do is to help enhance that, or to make it more to increase productivity in analyzing those risks. What I want to say though also is that with that promise of digital tools, you also have to be aware of increased noise in the data. Our members, risk professionals, are telling us that there's so much data out there. What do they look out for? How do they see through all these different feeds that they get? They think that AI tools might be the solution to that. But if your data is compromised, or if there's hallucination, or there are false cases out there for you to look out for, then it can taint the data pool, and that's where the human element comes in, the human oversight that's provided for by internal auditors and by risk professionals.
Thank you very much. So that's the questions that we prepared to try and get the conversation going. I'm going to the chat bar now. There are a few questions in there, and I think some of them may have already been answered or touched upon, but I will still ask them. So kind of staying in this kind of area around digital tools. Somebody's asked, what is the methodology that banks use to quantify geopolitical risks in processing things like ICAP or examples of RAF metrics? John, probably come to you first on that one.
Well, I think anybody in the financial service who understands ICAP will know what a massive piece of work that is for an organization. And really, you need a very, very good understanding of the risks you face. And then I will reference now a point who Young made earlier, is that the key part of the ICAP is not just the identification of the risks and the correlations of the risks. The major part is then the stressing of the risks. The scenario planning, which then stresses the risk both on a scenarios laid out by the Bank of England or the regulators, plus your own scenarios, which are more in tune with your own business model. And then the output of that really shows you effectively your capital resilience to an organization. So that framework is really, really good. It's very, very diligent. It's textual as well as mathematical. And I think that provides a framework for broader risk management in terms of resilience planning. And I think that there's a massive overlap in terms of that information flow. So I think that ICAP process is a phenomenal process, but it's geared around capital. I think the issue therefore it measures the symptoms of what happens, and then can you cope with it? I think the resilience planning, you now move from the ICAP into what banks now have resilience plans. And again, that is forced by regulation, and regs look at it. So it is becoming almost like a new department with new paperwork, and it's very, very key. So I think that's how banks do it. They segregate it out, they bring it all together across departments, across divisions, put a plan together, and then they stress it. And I can't, the scenario planning and the stress testing is the most important.
Ho Young, anything to add?
I think John is better placed to answer the questions specifically on ICAP and REF metrics, but I would only note that with given such volatility in geopolitics, you would want to revisit and reassess your fundamental assumptions about geopolitical risks and the categories of that, and that's something that you keep in mind so that the stress testing goes to plan.
Thank you. And kind of linked into that, there was another question here about there's two questions in there. What is the best way to mitigate geopolitical risk with so much uncertainty? And I think we've probably covered that quite well already in terms of, it's more of a risk driver. It's something that happens external to an organisation, and what we actually have to manage is the domino effect of risk of that. And that's where organisations probably need to focus more than trying to mitigate geopolitical risk itself. But there was another question in there. When we make an annual audit plan, but the uncertainty can hit multiple times of the year. So how do we, as internal auditors, as heads of audit with that audit plan, how do we now deal with that this landscape is so volatile? So, John, I'll come to you first.
Okay, well, I'd say the audit plan is a living, breathing plan, right? And it reacts like we all do to circumstances. So, there's no point doing audits in the midst of a crisis on an area that is massively impacted, right? I think the role of audit there can really be more helpful in terms of more proactive and support in issues like that. So I think the audit plan in all things has to be flexible and reactive to circumstances. So don't be hidebound by the plan. And any audit committee chair will work very closely with the chief audit executive and really do what is necessary. And I've seen in these situations where being crisis, we've had audit step out and do a particular review of a particular set of circumstances that were emerging and give us the audit committee a different point of view on it. So, the relationship of the audit group and the chief audit executive with his audit chair and chief executive, I think will play a big part in how that plan can move or be amended or be restructured to accommodate things.
Do you think that obviously, kind of a purpose of internal audit is about assurance, advice, insight, and foresight? Do you see geopolitical risk pushing internal audit plans into areas other than delivering traditional assurance? Do you think it's one that we really need to think about that insight, foresight space and deliver on that more?
Yeah, and I think it's mainly about ensuring, especially when you get to committee levels, the board committee levels, right? The chief audit executive is a really great source there for us to look at, to listen to us to get an appreciation that the organization is understanding of the risks and the risks that it is facing, and has the appropriate controls, mechanisms, plans to do them. To me, that is the most important job as the board. Do I have that relationship where that the audit group will actually give me that information I need for us to make decisions? And that is key. And so the skill set within the audit group needs to be able to do that and accommodate that. So yes, I think it's I think the expectations is, give me your opinion and advice. Don't just write a report.
Yeah. No, thank you. Ho-Young, anything from
But
you
back to
on
the earlier
this?
point that John made, so besides being adaptable and agile and nimble, I think also we need to ensure that we have spare capacity in terms of resources, our attention to these, because in the I wouldn't say old days where you have quarterly reporting in a very predictable fashion, you can monitor elections or changes of government ahead of schedule. You want to build in some sort of spare capacity to deal with the unexpected events that crop up along the way that requires your undivided attention. So ensure that you have spare capacity to deal with those sort of happenings.
Thank you. And staying with you, Ho-Young, another question here. How can internal audit encourage increased cross-department collaboration, greater openness, and reduce the culture of blame between departments?
Yeah, so I think I did mention 3 lines of defense earlier on. I didn't expand on that, and this might be the chance to do that. Second line and third line, obviously we have distinct roles so that the assurance process as it's designed to take place can happen. But that doesn't mean that we don't communicate. It doesn't mean that we are not allowed to communicate and coordinate, because the worst thing that can happen is to sit in silos and to flag up a geopolitical risk or indeed any sort of risk, and then sort of keep it to your department. So there needs to be that cross-departmental piece, and that's where internal audit, where I think risk professionals really look to internal audit for how you bring it back to the concerns of organization and to understand how the organization really needs to focus attention to ensure that all these assurances can take place as it's designed.
Thank you very much, John.
Yeah, very similar. I would say it's all about executive management, right? So there's no reason organizations should or departments should not be working together. It starts at the top, right? So I think clarity of management, you need to work together helps. I think a shared goal, a shared mission, resilience plan is shared across the organization. I think that's a great focus point to get people working together, not just in doing the work, but in think tanks, right? I think it's really case studies, think tanks in terms of training mechanisms. You can link your training into some of the real wide issues we're dealing with. So I think all these things that foster these close relationships are key. And I think for me, the chief risk officer and the chief audit officer, if that relationship does not work, I think you have a big problem. So I think actually it starts there.
Yeah.
Agreed.
And I certainly agree from my experience that collaboration, I think, kind of interpersonal skills and developing and focusing on those relationships. So yes, being task focused, you've got a common goal, but it's also about those informal kind of chats in the corridors, and taking advantage to build those relationships, because if you have a positive interpersonal relationship, when you're then looking at a professional relationship, and working together, that it makes it so much easier, and you've already got that grounding to actually then collaborate really, really well. There's, kind of having a chat every half an hour, even if it's on MS Teams, with counterparts across the organisation. Let's have a quick coffee over MS Teams. Let's have or even in person, as we, kind of move even more towards hybrid working. That you have to have that solid foundation of a relationship to be able to collaborate, to be able to share, to be able to move forward together with those common goals. So, for me, interpersonal skills and the development of those is really important, which brings me on to another question, which is about internal audit skill sets. With this geopolitical, these risks that we've been talking about, is there a change in skill sets for internal auditors given this level of volatility in this externally driven risk? Ho Young, I'll come to you first, if I may.
Yeah, maybe I'll pick up the point of also on technology too, and how that may change skill sets. I mean, we're not expecting risk professionals or internal auditors to be programmers or understand everything about technology, because after all, you are the professional who understands how internal audit works. So that's your skill set, your fundamental skill set that we are looking to you as human professionals.
Yeah, no, absolutely. John?
Yeah, I think the couple of things I would focus is, I think internal auditors now need to think more broadly, right? Not just specific. There are specific risks we look at, and specific audits we've always done, but the risks now are broader and more immediate. So I think you have to have a much more wide appreciation of those risks with the skill sets. I think with technology, cyber, and again, it's not programmed, but how an understanding in the group of how cyber is really I don't mean cyber crime, I mean cyber generally, is really sort of, the engine room of your organization, and the tools that are being used in your engine room to monitor that engine room and to control and protect that engine room. And many of that is moving to IA based, or looking at threats coming in, and exception reporting of type of threats coming in, the volumes coming in, is that changing? So I think you've got to have the ability to actually understand that side of the equation much stronger. And that does not mean to say you need to be a technician. It just means to say you put the effort and the work and the training to understand that. So it's that constantly evolves. You just need to keep up to date. Probably the pace of change is huge. So you need to sort of train and keep up to date much more than you did before, is what I would say.
Yeah, thank you. Ho Young?
Also, it's not to say that internal auditors or risk professionals should train to become geopolitical experts in this day and age, because the geopolitical experts themselves can't get it all right. They can't know every region of the world or every issue to be familiar with. And I just cite, for example, the issue of the invasion of Ukraine, because the community of Russian watchers and analysts and researchers got it quite wrong, and they were not expecting Russia to invade Ukraine even on the eve of the actual invasion. And that was because they were reading the signs as they were trained to do, which was that the Russian leadership was not preparing the population for that invasion. It was sort of kept under wraps and left a very small circle within the Russian leadership. And so, having that training, the analysts concluded that Russia was not prepared to invade Ukraine. And the reason that they got it wrong, in a sense, and it's not to disrespect them, because obviously we do make mistakes from time to time. It's some of the old issues that we face in our own jobs too: silos, lack of coordination, blind spots, and all sorts of things, even if you are the expert in a certain risk category.
Yeah, I suppose it's very similar if you think about it as, kind of hackers. People, hackers and cyber threats, etc., are successful because they do what's not expected. They find the loopholes, they think differently, and then they surprise us potentially, kind of with how they exploit, and they're very quick to exploit. And it's very similar in that circumstances that, kind of they did something that was unexpected, something that, you hadn't seen that kind of behavior and in the past. And, kind of most of us think quite logically, we see patterns and we look to them. And sometimes we've got to be ready for the unexpected. And that's really hard. That's really hard for any expert in their field to be ready for or to anticipate the unexpected. It's a bit like the unknown unknowns, isn't it? kind of scenario. That is challenging. So things are difficult. And internal auditors aren't experts in any fields. You may have your specialism, but you're still not an expert in it. So looping back to an earlier conversation about using the experts, but making sure the experts are doing what they need to do as well, to be able to give the proper advice and so on.
Maybe I'll pick up on Jürgen's analogy on sort of like Ukraine, because it's a great case study, because you're right, the experts were saying one thing, but I remember, I'll go back to one of my firms, is that we in our risk committee, with the chief audit executive was a key part of that risk committee with us as well. We looked at the experts, we listened to the experts, but it's not their job to tell us what to do. It's our job to then make a decision. Now, our decision, based on the degree of risk we were running, was that even if the experts are right, we felt the risk trade equation had changed. So therefore, we actually took action. And if they didn't invade, then we'd have lost some opportunity. But if they didn't invade, we had too much on the table. So that thought process we went through in that risk committee was taking the experts' input, but it doesn't mean to say it's a binary situation. You therefore have to make, and you may make a decision which is, an opportunity lost, but you protect the firm in a way that is in tune with you, not what the experts say. So I think, input at that forum, people who understand the organization, is very, very key.
Yeah, absolutely. And I was just I've got two more questions, and then we'll wrap up. But there was an early point, and it was in Mamon's presentation, I believe, mentoring of internal auditors. So it's a bit connected to that collaboration point as well, I suppose. Who should mentor internal auditors, and who could internal auditors mentor themselves? How could that work? John, I'll come to you first.
Okay. Well, I think this comes to the culture of the organization. I think you do two ways. You do it internally within the organization, which I think any quality organization will have a formal and informal mentoring programs, I would hope, right? Certainly I'm used to that in the organizations I work with. But a lot of it is down to the individual, right? I mean, it's one thing sitting back and saying, well, no one's helping me. Well, you have to help yourself. So I think you need to be on the front foot. Ask organizations, ask people, and you'll find people generally are very open to doing that, especially more senior people. I've mentored a lot of people through different organizations, and most of that may start as a formal relationship, but ends up as an informal relationship over multiple years. But I found where that's worked effectively is the individual puts the time and effort into it and is very clear about what they want. Where that works ineffectively is it's forced on you by the organization, and you're not leveraging it in any shape or form.
Thank you. In the interest of time, I'll move on to the last question. And somebody suggested that for auditing the resilience of their supply chain, they'd put together a questionnaire, and based on those results, they did focus interviews. And maybe doing that on a rotating basis with different focal points could be a way of getting assurance and over the supply chain and so on. What do you two think of that as an approach? I'll come to Ho Young first.
I think on supply chain and resilience, obviously the time-honored antidote is to ensure that it's diversified and that you have the backup to your primary supplier and all that. The problem in this day and age is that on something like microchips, computer microchips, you don't really have very much diversity to look at in terms of suppliers or countries doing that. And one just needs to have a plan, to look at other issues like crisis management and how do you react to this, besides using the old methods of looking at diversification.
Yeah.
John?
Yeah, I think there are many different ways and tools of doing it, and it really is what works in the organization. That one is as good as any, I would say. But I think the real value of that is the fact that you are forcing your head of supplies, or whatever that position is called, to undertake that exercise. So I'm not sure audit undertake that exercise. I think you've got to ensure that the people responsible for what you look at is going through that exercise, is understanding where we said their critical vulnerabilities, concentrations are, then therefore, when you come to audit, you would audit supply contracts. Have we looked at their cybersecurity in terms of are the right insurance premiums in there, are the right sort of protections for us. So I think understanding all that is key, but I think it's into a lot of working with the supply function, or however it's stretching an organization, to make sure they understand and control what they're supposed to be doing. And I think, yes, a survey tool, a checklist, whatever is extremely helpful, digital or paper form.
Thank you very much. Those are the end. That's the end of the questions in the chat. So I'm just going to go to Ho Young first. Have you got any final thoughts or anything that you think kind of you haven't talked about that you were hoping to talk about today?
I guess only to reinforce that we are facing lots of uncertainty a lot in the current geopolitical space, but it's all not new. I just remember that I started my career as a very young analyst, sitting in a think tank in Singapore, working on the South China Sea Code of Conduct. And it was considered the most boring thing possible you could think of, because what would happen possibly between the US and China? And that was something like 20 years ago. But actually we had, and this is not my credit, obviously, but work that I was sort of had the pleasure of being involved in, was that we had pretty much mapped out all the scenarios that the US and China could possibly engage in. And it was just that the drivers of politics in those two countries, all around the world indeed, were not present to the sort of levels that we see today. So it's not new. So the point I think John has been making, but we do need to keep on top of things and not to reinvent the wheel, but to enhance what we're doing quite well and to see what we can do better in terms of our professions as internal auditors and risk managers.
Thank you very much. John, final thoughts or re-emphasize points from you?
I would say just two things. Firstly, it's the more interesting part of our jobs, looking at this world, because it's a world we live in. It's a world we see outside the office was inside the office. So engage your brain is my first point I would make in all things. What you see outside directly impacts your business in some way. So understand that. And then secondly, I'll refer you to the summary in the article, which how internal auditors can help organize. There's 6 points there, and I think they are really very, very straightforward 6 points. I think that is a really good guide. And how different people go about doing that, there will be different ways, different weightings, different mechanisms. Everything involves trade-offs to some extent. And I think if you help the organizations to understand when they need to make those trade-offs and what their optionality is going to be, and they're well prepared, that would be jobs well done.
Thank you very much. So it just leaves me to bring this session to a close, and I just wanted to also add some kind of thoughts or kind of re-emphasize the key things that came out for me as I was going through. So I think, kind of one of the key things is geopolitical and macroeconomic. It's an external driver of risk. And actually where we focus as an organisation, we can't control that. But what we can as an organisation is look at how it impacts on our organisation. And to do that, we need to use expertise, and that might not coming from internal audit, that might be within the organisation and also external to the organisation. But however we assess our exposure to that driver of risk and its impact, we need to put it in the context of our organisation. And scenario planning, thinking through the different options, regardless of how absurd we might think that they are as an organisation, is still valuable work, because as we heard with the Russian invasion, there were no indications the day before. So things can surprise us and take us by surprise. So thinking the unthinkable in that scenario planning can be really valuable. Also thinking about that exposure to concentration, kind of if you've got concentration in your supply chain, in your financials, or in your, where you recruit from or the skills you recruit from, thinking about risk in terms of concentration, because if you have one shock and you've got to concentrate and impact in that concentration area, that's going to have a very significant impact on your organisation. And that all then goes to organisational resilience. And then, finally, as internal audit, flexing that internal audit plan, being responsive to those external drivers as the volatility and things change and new things happen, but also getting the timing right around the assurance. The organisation needs to respond. So what is our role? Are we to provide assurance after the fact, or are we to provide advice and foresight as that is happening. Where is our role and where do we pitch that? So those were the kind of key points that kind of I took away from the discussion today. I want to thank you all for being here. Thank you to Ho Young and to John for sharing their thoughts and so on. The slides and everything will be shared after the fact. I can see a hand up from somebody, but I guess that was kind of what the question might be. Thank you to Mamoon as well for taking us through the round table and the findings from there. I hope you've had a great day, a great session, and I hope you have a great rest of the day. And of course, thank you to ECIIA for hosting this discussion, and hope to see you soon. Take care, everybody.
Bye.
Right, thank you.